I'm the Managing Director of Plato Investment Management. We run about $5 billion, a bit over $5 billion in Australian equities and a small global fund. And we also launched a LIC called Plato Income Maximser just over 2 years ago. And I'm a director of that, and I've got one of my fellow directors, Katrina Anishi's, in the audience as well. Plato Income Maximser is pretty unique. It's the first and still the only LIC. There are obviously some LITs paying monthly income, but we're the only listed investment company that pays monthly dividends, and they're fully franked. It is based on an underlying investment strategy of a fund that we've been running for about 8 years now. That fund is actually $1.5 billion. So the unique strategy here is that PL8 actually invests back into that fund. So it's a minority investor into the fund. That fund has a track record of delivering over 9% income since inception after fees. That fund and PL8 have been designed specifically for a certain type of client, and that is retirees or people who want to, for low income and want to live off the income from their investments. And clearly a monthly dividend paying stock that pays fully franked dividends that you can thankfully still get a refund for now that we've had the election is something that's very attractive to Australian retirees. So just some stats on PL8, ticker PL8. So it's one of the first ones that's using a number there, and actually the 8 is pretty much what it's yielding at the moment in gross terms. Listed on the 5th of May last year, 2 years ago now, and market cap's just over $350 million. And it's good that it has been able to provide income, because you look at macro-wise, you know, we talk about lower for longer, and now it is lower for longer. We've just had 2 interest rate cuts, and the market's looking potentially for 1 or 2 more. So it's got very hard to get retirees to live off the income from term deposits or cash in bank. I mean, you're getting 1%, that's very, very little, and your term deposits, you're probably lucky to get a 2% term deposit these days, so it's basically not covering inflation. That also flows through to anything that's linked to the RBA cash rate or to bank bills. Bank bills have dropped about a 1% this year, so even if you're getting something that's got a margin of, say, 3% over bank bills, actually you've still seen a drop in your income through the fall in bank bill rates. And bond yields, 1.3%, got down to 1.2% a couple of weeks ago. So unbelievable, really, isn't it, in terms of the world we're in? But guess what? We are the lucky country, because I don't know if you saw it, but France did a bond issue a couple of weeks ago. They did a 10-year French government bond. Get this, you had to pay the French government 13 basis points per annum to buy the bond. So you're actually going to lose money. You would invest $100. Well, actually, you'd invest less than 100. We actually invest more than $100 to get $100 back. So it's unbelievable in terms of where we are in the world. But interest rates are very low. Thankfully, the yield on Australian equities has been incredibly good. In fact, we talk about investing in Australian equities for income and growth. The yield on the Australian equity market has averaged around 6% for about the last 20 years. 25 years. Yes, it goes up a bit and market goes down and vice versa, but it's around that, thereabouts, that 6% mark, including those important franking credits. Now, our high income strategy is really targeting, which underlies this LIC, about 3% more dividends and franking credits than the market, and that becomes very attractive in terms of where can you get 8 or 9% these days in terms of income. Particularly, I mean, you can get those sort of numbers out of the banks and Telstra, but they've been pretty tough performers. And you'd probably think, oh, well, you're running an LIC, it's income LIC, so you're overweight